Okay, sorry. Hi there, guys. Can you hear me okay? I'm assuming so. Looks like it's coming through all right. So just checking the message. Sharon, are you on Android, Sharon, or are you on Apple? For some reason, it didn't push through to my Android, and I've got both sitting in front of me, but it says it's finished. Android, okay. Yeah, strange. Apple. Is that the push notification from YouTube or the push notification from the app itself? But never fear. Doesn't really matter too much. I'll get it sorted out. I'm trying to. So with the push notifications, when you send them through for the app, it'll pop up with trade setup, and now you can add different things. And it looked like it may have just come through. There we go. That's not what I wanted, but anyway. So it did just come through, but I wanted it to pop up with a. You can put a picture in there. You can add the links and all these little bits and pieces. We'll get that organised for you, Pete. It's a bit weird. You have to go to your phone, I'm guessing. Yeah, so you can add in with notifications when you send them. You can add in a picture, which I just tried that today, and you can add in a link now, which the link's been coming through, say a URL, which is great. So when you open it, you can just send it straight to different spots, whether it's an alert we want you to buy, then it goes to the app. You've got to get into the app. If it's something with TradingView, it's just a chart. It can just go straight to that URL. But for some reason, I put in the pictures and not quite coming through, I don't think. But anyway, so it should pop up on your lock screen with the alert and ahead of a picture of a little man in the box, which I thought was pretty cool. But I don't know. Did you see that at all? And by that, I mean, I'll show you. So I'll show you the actual alerts. You'll be able to see that. So what it should come up with something like that when we send it through. This is the system, and it should come up with something, like that on your screen. But mine didn't for some reason. So quite fancy, but it didn't seem to go through. Anyway, we'll forget about that. Let's get into it. Welcome. Another day, another rally, it seems. Love it. So we had the markets. It seems to be just completely neglecting anything negative at the moment. Um, so it seems to be over the weekend. I think it could cause some issues, but you never know. I mean, the market's still buoyant as long as no one says anything bad about trade. And half the time it doesn't sell off, it's just going flat when there's something negative about trade. When something positive comes out, boom, up she goes again. So I think on Saturday, Friday night, had news. It's just the same old, same old. If they want to buoy the market, both sides have come out and say, yeah, we're going to make a deal, da da da. Been saying that for 6 months and still can't get a deal across the line. Or probably longer than that. The phase one deal has been a few months, I guess. But we're getting closer and closer to December the 15th, which is more tariffs to be whacked onto Chinese imports into the US. So, and they can't make a deal just yet. They haven't come through with any terms, anything really. Just the fact that they keep pumping up. Trump will keep saying, we're closer to a deal. We're closer to a deal. Chinese say, yep, we want to make a deal. You should just really do it. But the market seems to be neglecting that at the moment anyway. Just bear with me 1 second. Oh, actually, no. Yeah, I'll just have to mute that. So I just had a phone call coming through. So it seems to me the market's not too worried about that. They're anticipating, okay, I guess the rhetoric, when you look at it, it's really changed a lot. I mean, it's been going for nearly close to 2 years, the trade war now. And lately there's no back and forth saying, we're not going to do that, we're not going to do that. They're actually, the constant message is that they're going to make a deal. It's just, whether it's going to be this year. And even the news that I think had a bit of a sell-off when the news came out. Was it last week, or I think it was last week, that maybe not by the end of the year. They may not make a trade deal, but China doesn't want any more tariffs on their goods. And I wouldn't assume US wants to put them either, because that's just crimps everything for them. So you would expect something to be done. But either way, g'day, Jane. Either way, the markets was quite buoyant in the US, and they trending back up. So now they're into new highs. The US is doing great. And over the weekend, I think it was Saturday, China attacked the US in the G20 meeting, which I thought would have been a negative tone for today. But look at our market. We've popped up. Let's just minimize, get rid of that. We're up 39 points at the moment. Let me just change this. I need to change. Here we go. It's up 39. We've been teetering up 40 points or so. It's quite strong. And if you look at other markets, I've got a trading view. I'll just get up. They, gapping up. We've got the US gapping up again on the open. If you look at, let's just get it here. This is the Dow. I'll get that bigger. So there's Dow on a 30-minute chart. It gaps up about 80 points or so. It's up nearly 100. Up about 100, I'm guessing. Where's the YM? 83 points at the moment. From the close on Saturday morning, so things are bullish. They're doing quite well. And our market seems to be taking it in stride. The Aussie dollar is heading back up again. So generally, a rally in the Aussie is linked with positive trade sentiment. And that was, you can see it was, well, here's the Aussie here. It was sort of capped on Friday night and was finished on its lows pretty much, and it's opened and gone up. I still can't see what news has triggered it apart from Asia, opening and going positive. I'm not sure exactly what Asia's doing. I know they're up, but Asia's positive today. Maybe it's just dragged us high. Our equity markets dragged the bulls back into the Aussie and things like that, but they didn't react on Friday night, which was what you would have thought. And it's really nothing. News changed. I think if anything, that news about China attacking the US at the G20 meeting, basically, I don't know what they were saying. They're calling them a nasty country, spreading bad words about China to other nations. So that's what they was basically saying. I thought that would have been a negative on the market because this is over Hong Kong, and if the US support Hong Kong and their efforts to remain independent, it's against what the Chinese, and that could just blow apart any deal. I don't know how it would go, but there is that chance. If the US press forward with their support of the Hong Kong, getting their independence or remaining independent from China, then that's going to cause some sort of issues. But it's yet to see how the US have how they're going to respond to those attacks from the G20 meeting from I don't know who it was, but some Chinese minister. But either way, the markets don't look like they care today. So that's the thing. They're still ticking on higher. So that's a good thing. Today, yeah, like I said, just markets were up nearly 40 points. We'll look at the ASX. Let me just go over here. I want to remember that one because it looks pretty good. Actually, let's just go to the ASX. I'll go on this. Make that bigger. I like TradingView. It's quite good. Let's go down to. So it's this level is having a bit of problems with. I go to a daily. Had a bit of a sell-off. This is on the daily chart. So we had a sell-off. We pressed up through that 67, so 67, 60, 70. Pressed up through that zone a couple of days ago, then fell away and took out it's not a key level by any means. It's just a high low, which means the market can press down, hold this high low, and then chug its way back up again and trade to the all-time highs, into new all-time highs. No reason why I can't do that. It's just if it consolidates under here and holds and starts to hold another high low, I think that's going to be a good move up to new all-time highs. At the moment, it really is still an each way bet. This market could tip over just as easy. If this holds a lower high in here and fails to get back up through 67.60, like press higher from here, then we've got an issue. Let me just clear this up. I'll tell you what I'm talking about. I'll show you what I'm talking about. Who else is bullish or bearish or on the overall index? This is what we've got. That's your zone, you into your all-time highs. This was a little, it's only a minor level we're struggling with for a while. And now we've got a lower high here. And you can see, if you're looking at this level up was broken. So there is a chance where the market can head south from here again and do something like that. We don't know. But just as easy as that, it could hold up, press down and start to do something like that and press up. Does that make sense? So there's nothing to say if it consolidates around here and we get this kind of price action there, I'm expecting to go into new all-time highs, especially if the US just keeps ticking on, ticking on high and shakes off any negative news. They just keep pressing up. Now you've got, again, it's that same old story. I think people like to be in the US. Europe, not doing so great. They're looking at the numbers manufacturing data that come out in the EU or in Europe. Wasn't so good. Yeah, it could, Sharon. Um, I'm just with the overall market. I think this is pretty bullish. I mean, if you take this as, just look at that. It's probably maybe something like that. It's got some room to correct lower and just flush out because it needs to flush reset. If it can flush out a few buyers, I mean, you can even take that level back there. Flush out a few buyers with a pullback, but hold this trend up. Flush out, especially you can see if we take out these lows. Let's just make that a bit bigger. And we'll just minimize that. It can easily flush, pull down, trade into that zone around 6,600. And what that'll do, especially if it holds a lower high here, and it's done it before the market sort of pressed down and we had more action, it was something like this at the time. The market was pressing up, and then you got a lower high come in, and the lower high is always going to drag out some buyers, but that was the action. The problem was when it does something like that, it squeezes people out, but it hasn't broken any anchor to really start the buyers stepping back out of the market. So what these sorts of things do and what they engineer them for, you get this lower high coming to play. Obviously, there's people look at markets differently and they look at price action differently. I think it's a really key thing to know where your anchors are because the market can put pressure on the downside without breaking a key anchor to an uptrend, and then start resuming that uptrend. And then you've got everyone that's been squeezed out, potentially that got in a bit late in this move up. They get squeezed out with this lower high. They just see it and they go, okay, I'm putting my stops under here, for instance. I'm going to put my stop. I've got stopped out. The market hasn't broken the anchor, which is lower. And then the market turns around, and heads back out, and they sit there going, well, what happened? I better get back in. And they end up chasing the market back up again. So the market can do that easily. And if it holds a lower high here, it could be something like that. It's going to put the pressure on. All your bears are going to be ranting and raving, stamping their feet, say, oh, look, I told you it's going to roll over. And then it turns around and squeezes back up again and really puts the pressure on. The longer term, it's holding key high levels. A bit of a grind up, squeeze them out, bit of a grind up, could come back to another squeeze out. Squeeze out, press lower, and then grind back up again. Sooner or later, there's going to be this kind of acceleration higher, I think, and into new highs and just really press up, drag in some more buyers. But at the moment, I don't want to load the boat thinking that that's going to happen because that's taken a biased view to the market, if that makes sense. That's taking a I don't want to say, but an egotistical view that this is what's going to happen. You've got to be prepared for both. Now, what's going to happen if we get this kind of action? We get a low high and it breaks through this level here, and it starts to, we start to get this bit of a stretch to the downside. I'll be happy to look for a short, for instance, if this kind of thing happens, because I think if we press down to this zone, say 60s, well, it's a lot lower, it's probably a fair bit lower than 6,600. But if we start pressing down, then we could get that becomes a key lower high in regards to that all-time high at 68.57, I think that was. Is that right? 68.75. So this zone becomes a key lower high. That's if we press down like this. If we press down like that and we break sort of this uptrend, then something bigger, a bigger move down is potentially going to start playing out. But if we hold up around 66, it could just be a flush and we start to reset and go back up again and really drag some more buyers in. And that's where we might get this kind of price action playing out. But until then, I'm always happy to sit on the fence with the overall market and wait until it gives me something significant. So whether I should readjust, the portfolio, whether we're going to be biased completely long, or we're going to get into some gold stocks if they start playing up, or if they start to present themselves, or are we going to get into some more shorts? So at the moment, we've got one short on, which is actually doing okay, but it's struggling to continue down. It's a bit of a bugger. We got chipped into that one. I'll show you that. What is it? NEC. So that setup, even the overall market was positive. That setup is on the downside, and you can see The market's pressed down. It's had a good grind back up. You got this minor double top come into play somewhere around here. You can see high here, double top, especially after this. Actually, I want to draw this up. I want to show you something that's very important just to take notice of when you're looking at your charts. Here we go. Because it's something that when the market does it, you just got to take note. I'm going to get sidetracked here, I know it. So you can see the market's pressed up. It's done this kind of action. Now, when it comes down and it holds lower levels and presses down like that, hasn't really broken an anchor, but it's broken. This is more consolidation. Your next anchor, it's probably another anchor here. It did break the anchor, and then it's traded back up to retest the high. That's a fair bit different to, how do I say, so the market's trending up like that, and people see this kind of thing and see a double top. Now, don't forget, that's your anchor to the uptrend just here. All right, it's important. It's an important difference. You could do that and do the same thing and then go. And what that'll do is just drag people in. They're looking for that double top. They're not understanding the complete context of the structure, the price action that's starting to play out. And that's different to, let's just say, that was the most recent leg up. And that's your anchor to a break of the anchor and then starting to retest the highs. That's different. That puts a lot more pressure on the downside off a lower high, off a double top. Or, we call it retest fail. You've got the two tests, 1, 2. Oops, if I can draw that, 1, 2. Same here, but the difference is the break of the anchor, which is here, and that break of the anchor there. Does that make sense? So they're two different scenarios. That there is not really squeezing out anyone. It's squeezing out the last, this leg up. That's the only one that's really squeezing out. Let me just try that up. So that leg up there, you're probably putting pressure on them. The late buyers are going to be squeezed out. They might be squeezed out. They may not. But when you break an anchor, generally there's going to be stops below a key, high or low. It puts pressure with a move down like that. It puts pressure on that anchor, and it squeezes out a lot of traders. And there might be traders that in this section, in this rally, that have got squeezed out too because they're just following the high or low up. So it's a key difference when you're looking at price action and what's going on. Does that make sense, guys? Can you understand what I'm trying to say there? That was really your anchor. That's pressed back up, flushed out. You got this retest here. Retest is more of a triple top, really, when I look at it. But what it's done here, it's come back and retest and then failed. And we've got, a setup here, which we're looking for. The trend is down, MA is down, market's rolling over. It was overbought up here, as opposed to last time it was overbought, was up at that 210 level. The pressure's definitely down. It just gapped down, caught us with a gap. We are up at the moment on that, but we're only up probably about 3 cents, and it looks like it's getting a bit extended down here. So you're wondering whether we just take it off and look to reset if it can push back up to 180. That was our original entry. It was meant to be around 180 to short, and we got 172 instead with a gap down. So a bit of a bummer. But yeah, I thought I'd just touch on that if I can clear this up, actually, I'll go a new screenshot. So the overall action is something like this, and then you're just breaking down these legs. So is that what I just said make a bit of sense? It's just something to watch out for. If you're drawing up your chart, so if you're just trying to get an idea and you go double top, just make sure how much strength could there be into the double top, because people always look at that, but they forget to, they fail to sort of add the context to it. Even this one, it's, we've got a high here, a high and a high. This is your anchor. It's failed. It has broken that anchor and it's retested again. The same thing it did just here, the third time. 3 tests and then it started to fail. So this is potentially a reason to be short into NEC. We may not have finished yet. We may be trading right back down. We may trade down to 130, 35, 30, 140 or thereabouts with this short. We'll have to see how it plays out, but there is potential with this structure. Longer term traders don't want to hold it. Shorter term are probably trying to jump in, getting caught out on the downside. But yeah, it doesn't look like there's much reason for me, but for people to hold that, if that makes sense. So yeah, that was just looking at NEC. So let's, I want to jump into oil before I get too caught up in talking, before we put up some charts. I just want to go over, just touch on oil. I think there's it's looking quite good. Very crude. So it's more the longer term. Actually, that's a daily. So I don't know if anyone follows. If you get onto TradingView, we pop up. I'll start posting quite a bit on TradingView, especially if it's not an entry alert. If it's not to buy, the buy alerts go directly to the app, and you can only get there as a paid subscription. Otherwise, there's bits and pieces I like to post on TradingView because it holds. It's good for your crude oil, your currencies, sorry, your commodities, your bits and pieces like that, and it actually keeps the support resistance zones that I've marked up. So it's quite handy in that respect. So if you haven't got that, just where is it? If you go click on ticker, drop it down to people and put in trade, you got here trade_setup and follow us that way. It's a good little program, TradingView. So here, this overall structure is what I'm looking at on oil. If we go to probably even go to the weekly, I don't need to go to the weekly. So you've got the market, tipped over here, and that was back in 2014, tipped over, pressed all the way down to around 26 bucks, where it started to rally. Was that the biggest move down? I know, I was trading it here, so I was trading all the way up here, traded a bit on the way down, started trading it back up here, and then gave up, I think, after that. But you can see that was through the GFC, big, massive sell-off from about 140, 150 bucks a barrel, all the way down to that 2034 zone. Tried to pick up, had a key resistance zone through here. Sellers kept pressing in, and you can see that contraction up. Quite handy. You can see that, then tipped over again, and then we got that big sell-off. Took out the lows only partially, so it's always good. I don't mind when I see lows taken out like that. It pops back up. Then what happens here? It cleans out the lows because you know that for whatever reason there's going to be buyers into that support zone. There's going to be buyers into there. They just sit on the bid going, okay, we're all-time lows. I'm going to put it in a bid. I'll put a stop below it, and bang, they get in and straight back out, squeeze back out, and then the market will bounce. Time and time again, it can do that. It will wash out that level, a key level, and then reset itself. It's just to clear everyone, basically most people out of the market, and also get fuel. If the market's going to pop, the market's going to rally from here. It's going to get some fuel on the short side. They're going to get shorts in here, sell on the stop at the break of that low, expecting it to go maybe 20 bucks or something, get a short trade on, but that's fuel when they have to buy it back again and the market pops back up again. I just want to get rid of that. I don't know why that happens. Anyway. So we can see the market's pressed back up. Now, held at this stage, held a little minor level, inside level, and kept pushing up. So you got an inside high low, pressed up to 75 bucks, and then it fell over again. I don't know if that was anything to do with the trade war or thereabouts. No, that was that big sell-off we got in September in the equity market, September, October. Coming into Christmas, a big sell-off, market tipped over. They were talking about bonds, recessions, all that sort of stuff. Market tipped over, pressed back down to 42, and then we've been gradually resetting at higher levels. So you can see the most recent high level was at 51.35. Okay, so you got this zone is holding. It's held 1, 2, 3, and we've got this contraction lower. If it was a weak market, the market should have pressed down, continued to press down, taken out 51, potentially traded through 50 down to mid 40s or thereabouts, really pressed lower, but instead it started to hold up. So I think there's two things I like on oil. Yeah, it's going to be choppy, and it's going to be choppy until there's a trade deal done, which is fine. But I think generally what's going to happen, there's going to be less bears jumping into the action to sell it down, and more bulls starting to, early, someone that's willing to take that early risk that crude's on the mend, starting to look at oil stocks as well, all this sorts of stuff. So what it does is just start to, all this action flushes out one side or the other. And I think at the moment it's just flushed out the sellers. It's cleared them out. Anyone that's willing to sell here, good on them. I think there's going to be less people willing to sell and more buyers starting to step in. So you get that weight of selling pressure, whereas this is completely different. No buyers at all. Boom, straight down. Buyers started to step in, then sellers were keen to step in again. But as they get held up at higher levels, the sellers, or at least the smart sellers, start to step aside and go, look, somebody's starting to, it's getting accumulated. It's getting held up. It's getting held up at a higher level. That potentially means if you can just say that level, whoops, that's not what I want to do. If this is the case, and that's the rally off, that low to high, low of 42.30 up to high. If you can extrapolate that out, it takes us back to 75 bucks potentially. If this level can hold, this move up can just grind its way back up to 75. There is potential for that. So if that's the case, any positive news is going to support oil. Any negative news on trade, at least, it's got to be a serious negative news at the moment, I feel, because you also got on top of that, you got production cuts into oil from OPEC, and oil producing nations are happy to sort of cut production, limit supply, and gradually, if you get demand starting to increase because they think the trade war is at least coming to a phase one deal, it's nearing an end, then you should get that anticipated lift in demand should see higher prices on oil. So that's my theory. This is what I'm looking for anyway. I don't mind to see if it could pop up through 60.75. I expect it to flush it out. I don't take much notice of this because that was on the back of fear. It did clean out a few, stops or whatever that might have been placed above 60.75 when it gapped up, cleaned them out. But then anyone that's wanted to re-establish a short has done that with this move back down to 51.35. But then as we start to gradually hold these higher levels, with this grind up, especially if you break out of that contraction now, if that contraction is here, yeah, there may be still more. We may find that we get capped at 60.75, but I just think that's the level there. That's contraction lower. That key retest 3 times of 51.35. As we get the market pressing back up, I think that's going to put pressure on on any sellers that start to build up and really take us back up. So I do expect some sort of push through 75. That we call it back and fill. When it washes that level out, comes back down, doesn't break the anchor, continues this trend up, holds, and starts to lift to 66.75, and then you just get it potentially over time. It's going to take some time to work out, lifting to 75 bucks a barrel. But again, that's going to be, I think, that sort of action playing out is going to be dependent on what happens with the trade deal between US and China, and also, if they keep cutting production, OPEC nations. But we'll see. So that's the idea. If we go and look at, I've got a couple that I was looking at. What are they? STO. That doesn't look too bad at all. You've got, weekly, it's on the rise. A key higher level at $5 I was going to say $5 a barrel, but it's not. $5 a share. We've got this good retracement. It's lifted again. That's got the potential. If you go from $3 to $7.50, $4.50 rally, it's got the potential to get up to $9.50 easy, just grind its way back up. We should take you back into sort of this zone. It could extend that, get to 10, 11. That is the potential on Santos, and it really looks like if anyone can see what I'm looking at here, you got this good pullback, good rally, grind sideways essentially, gradually down. It started to lift again. That was a good acceleration higher. Got to $8, had its first pullback back to the MAs, or first decent sort of a corrective action, and it's starting to lift again. This could be corrective action again, but you can see that there is a lot different to, say something like this, that V-shaped type of recovery. So that kind of action, it's not very deep. Any sort of pullbacks getting bought up, pullback, bought up, pullback. Got a bit deeper on this one, down to around 77, what was it? Lows of 785, and it's bouncing again. So that's all of this. That's correcting that leg up, but I don't mind seeing that. It's because more the MAs are catching up to price rather than price catching up to the MAs and falling harder or a deeper corrective action. So that's what I think. That's quite good if we can get maybe something. This is the kind of action it's done. It's just been grinding lower. We get that, and we start to get it accelerate off a higher low. There might be a buy entry in that. I want to see it pop up, maybe 820, pull back, retest 810 or so, start to build, and if it can give us a key high low, then that could be a good little, depending on obviously what oil's doing, that could be a good trade. And I think it's in a good zone. So the pressure on the downside, so pressure from sellers, first, I guess, really moved down. You've got this push down, another push down, just through $8, and at the same time, you can see sellers putting in a bit of an effort to press it down, and another effort recently, which is getting soaked up. But it's getting soaked up at high levels rather than getting soaked up down at 740. So that's a big difference, as opposed to something else, market rallying and just falling over. this first correcting a bit of a bounce here, and the next one really accelerates to the downside. So something like that action on the way down is a lot different to that action. You can see, and that there's more conducive of buyers are stepping up to soak it up. They're soaking it up, soaking up any sort of selling pressure. So if you get stochastics going from overbought to oversold, it means the sellers are putting in a good effort, except buyers are soaking up. They're not waiting for it to get down to 740. They're not waiting to buy on a pullback, a deep correction. They're not, getting ticky touch. They want to be in. They're willing to soak it up. They're building a position. This market could be heading higher. That's their view anyway. That's what I feel. So WPL, let's see what that's doing. That's a bit different. It's really choppy. That I don't like that action there. That's a key higher low. I think that's got a fair bit of work to do before we get some sort of bullish action. OSH, a few that are just chopped through. This is not too bad. I don't mind it so much. I want it to do some work. I wouldn't buy this just here because this kind of thing could happen. It pressed up, went sideways, you expect it to go, and it rolls over instead. But the fact that we'll go back into the weekly, the fact it's had two good moves down, it's come back into a key zone around 625. It could easily rally from here. If you can get, I guess, on the daily, more sideways action and people starting to lift, and if crude starts to lift, that could be the support it needs to kick off. But we'll see. That's not as good. I like STO, looks a little bit better. ORG, I think that was one that I just whipped over these before. So that's trending high. It's looking good. The weekly, that could start to accelerate. It's getting a bit stretched up here. That's the only thing. I think a bit of heat might need to come out. So it's both the daily and the weekly getting a bit stretched up here. I wouldn't buy it here because then I want to put my probably stop would be somewhere around the 750 mark. Not willing to do that, to be honest. I would rather just let it pull back, see if it can consolidate around the MAs and lift again and have a really nice tight stop to see if they can accelerate back up to, it could go to 10, wherever, right back up to $10. I mean, that's got the ability to keep accelerating higher or just grinding higher up to $10 or even through $10, because that would be a key higher low there, 6, if that's the case. But we'll see how that plays out. It's still got some work to do on Origin. Now, was it BPT? Again, that looks like it's setting itself to go higher. And that's in a, BPT looks a lot better. I like that, and probably STO the best would be my two favorites at the moment. Just looking at the charts. Don't know anything about the fundamentals of what they're doing, but it's just looking at the charts, it's getting some support. So this is definitely, right from 2017, it's been grinding high, had a good press up to 220, good pullback, buyer stepped in, popped up, retest, pull back. So that would have been a prime entry. I don't know if we traded it then. We have traded BPT a few times. This year it had that pullback in here, got supported, accelerated again. So this, if it gets supported somewhere around here, I'll be looking for a higher low to play out or something to give us an entry setup. But even here, it was a tough one to trade. Just in here, you would have got maybe an entry through that high at 226. That was your first sort of corrective action after it broke up and out. Minor support, but that's not a solid entry for me anyway. Yeah, I'll be looking for this one to see if it can probably go through the weekly, just to see if that one can actually find some support. It's got some good action. Maybe we have a deeper pullback, maybe we don't. But if it can pull back here and start to chop around, you've got stochastics coming in a good level. So I don't mind the stochastics when it pulls back, down to oversold, and it holds a higher level and then starts to head back up. It gets a bit extended. When it gets to overbought, just see what's happening when it's at overbought regions. And then we get a pullback. So when the sellers start to come in, that's the selling pressure. Comes back in, pushes it down to oversold. Where's price? Okay, it's at a higher level. It just means that if it's at a higher level, the sellers are given a good nudge. It just means the buying is still strong. Okay, the buying is happy to support that price. And you can see I don't mind seeing volume decrease on the way down. It just means that there's not that many people giving up their positions. Potentially, there'll be buyers start to step in at this level. So if we can get, let's see, this is the price action. So that's to move higher. So we've got something like this, haven't we? If we can get it start to support here. I don't mind even if there's a bit of a washout and then start to hold that level again and contract up. I'd like to see that. Just take a bit of time, set itself, set at high level, or reset at higher levels, start to see that, go from oversold, start to creep back up on the stochastics, see the volume start to pick up again, and see that hold a higher level or consolidate above, I would say around 230. Maybe the support's caught up to it by then. I don't know, but just see if we can get this kind of price action, hold some high levels. So we've got something to work off um, on failed new lows. That's what you want to see. You want to see sellers start to press it down, buy stepping at higher levels, buy stepping at higher levels, like here and here. If that can play out, then that'd be great. But even if it just from here starts to go and hold a higher level there, it could be a good little entry to get through, was it 250 and start testing up towards 280. I just think that might be a bit early if we get this kind of thing play out, but we'll see. Yes, that's probably all I was looking at just on oil. Whacking some charts now if you want, guys. We can analyze a few different things. There's a couple more that I might just look at while we're waiting. Net, that looks pretty good. Looks good on that chart anyway. So this one here is Netlinks had a good little run up. This is on the weekly. Just go into the daily. I think that's the best fit. Yep. So I don't mind this one. And you got on that first little pop, you got some good supportive volume, and any sort of selling pressure that come in, it was holding a higher level, had to consolidate at that level around say 10 cents, start to lift again. Then you can see the volume pick up here. I'll draw that. It's always good to see these sorts of things happen and try to piece together a story. And also, I don't know how many people actually take snapshots of trades, snapshots of just as an example of price action. I tend to do it a bit. Every trade we put up anyway, any idea we put up, we're always taking a snapshot of what's going on. It's good just to review it every now and then. But this one, for instance, you got this rally here and good volume come through in here, good supportive volume. And when it started to hold through here and lift again, so when it was lifting in here, you can see this volume starting to step in again and holding high levels. So when you get this kind of thing that's bouncing off the MAs, you still got some sort of bearish action. People were happy to sell into it, but it was getting soaked up. Any buyers, it was soaked up on the MAs, and then you got this really big acceleration back up to the highs. Bit of distribution. The market's come back down. Volume, you can say this is more selling volume. People looking for higher levels got stopped out, potentially, tight risk through here. Then the market started selling off, and then we just started to wait to see where it can settle down and find some, find some buy step in. So this is what I'm looking at the moment. You can see that it's probably harder to see the volume through here. Can everyone see that? The volume's easing off. It's not like it was previously. So potentially this is what we're getting. The volume's easing off when we went through this zone in here. Maybe it's the same thing, but on a bigger scale. If that's the case, and we can get something pop up, I'd ideally like to see it, back on the MAs, pop back up, and then start to do something to hold a key higher level. And that way the MAs could start to, if I can draw it, start to roll back up again. Does that make sense? And see if we can get that back off the MAs. Something like this. If we can get that, that'd be great. All right. So that was NET. It's only a smallie. It's not trading a lot. So it is actually, here's another one. I just wanted to, whoops, let's get out of here. AEDT. Now this one I was looking to do it as an alert the other day. That price action looks good. Look at that acceleration, just constant, good leg up. This move down was probably 1/3 retracement of this leg up. I'm not sure. Probably about that. Yeah, it was probably just over, it could even be, about 30 to 40% retracement on this low at $6 off the highs at around 850. Just to clean out enough people, put them back on the sidelines so you can see that good squeeze down, then started holding up here, holding higher levels, started to lift. The problem with this one, the liquidity is low. So I didn't want to send out an alert, get too many people chasing the same price, but I thought I'd just pop it up because price action wise, it's a good one. Again, just take a snapshot, mark up some levels, mark up what you want to see, and then just see what happens. It's good to refer to later on. Oops, like I said, with this one, if you drew up some things and just mark up what you want to see. I mean, for me, entry zone. This is a cracking entry zone in here. After this kind of price action that played out, I wouldn't really trade, but I'm looking for that first leg pullback. That's your first key pullback. Consolidation, you're starting to get it bounce off, so you get a nice early entry for this run up. If we can get something play out again, great. But I would mark that up, save it on file just to refer to later. AD might be another one. Similar type of thing here. You can see we've got this, it's only a minor move up. The market's washed out, but that there is a higher level than previously. Okay, below $3 it traded to down here. Let me just see what the weekly was showing. Was that it? I think that was the one I just took, wasn't it? Just want to make sure that that was in here. Okay, so it traded through. So you can see the market creeping up here. Good pullback. Didn't really break. I mean, when you're looking at the weekly trend, that was a leg up, pullback. It got some lower highs in here, but it didn't break the anchor. Trend is still up. Trend is still up here. Started holding, and this is what we got the price action here. Once you get, these sorts of things, pumps lower, holds a higher level, then pretty much goes sideways to up through here, and then takes out your high. Probably should really. I'll draw this up. I just want to magnify that. I'll do that's what I want. I can't do it, can I? You can see in here, it starts to take out this high, hold a higher level. This to me would have been a prime setup, and that was in this zone in here. You're nice. You know exactly where your risk is going to be. If you can see that breakthrough $4, your risk is only. It could be quite tight, really. It could be, say, around 380. I don't know what that is in percentage terms. It could be somewhere around 5-6%. That's not too big. I think that's a cracker. And then it starts to kick off. And before long, you're trading up to $5, and then you can sort of forget about it. That's a 25% rally, isn't it? 25%, yeah. So that was quite good. So if we get this same thing, that price action potentially playing out, we're starting to hold. Well, probably already it's on its way. If we can get through these highs, if it starts to fail up here, then we want to see what happens. If it fails and pulls back from 850 and starts to hold a lower high, then I'd be worried that this whole thing's going to roll over and it's going to start trading down to $6. But at the moment, we're holding high levels, pressing up, pull back. We could, especially, so there's two things to note. Sorry, I'll keep getting sidetracked, but if you're just watching the action, and it starts to play out, I'll take a snapshot of this. It's a handy sort of a point to remember. So all we're doing, we've got a level here, higher level, people stepping at higher level, especially when you got this little acceleration up. You got through it was a key level, $8, and then you got this minor, if you can see, minor higher level just in here. So that would have been the entry probably Friday, with risk at around 775. So you're up at the moment. I don't know what you'd be up. Let me just guess what that high was. That high was high of 8. Say you bought at 820 with this stop below, say, 785. So it's not too bad. So that was your entry just in here. Now, the first thing you'd be doing is going, okay, well, where's it going to go to? How could it fail? This action to me looks quite solid. I believe it's going to lead to a lot higher prices. Just going to kick on. It's going to get up through 875, pull back. Just follow this kind of thing. I want to see that. That's what I'm aiming for, anticipating. Now, the first thing you have to do is just see, because your first port of call where there could be a problem, you could be completely wrong, is going to be around 850. Now, there's two things I'd be watching for. If this market can press up and bust through it before we have some sort of corrective action, then great. I'd rather see that, and it could come back like that, and you could be put under pressure. Who knows? But then ideally, if that was your entry and you get, you see it pop up and it comes back without, putting you under too much pressure, great, because I like to see it break a level, clean out, and then I think it's going to reset to go back up again. So that's what I would anticipate if I see it break a level. Now, if it comes up and we've got this kind of action and it presses up in that level and it pulls back, and then you start getting it maybe consolidating under, I'd be concerned that it was going to fall over and you're going to get a lower high come into play and the market to press down. Then you've got to worry about this key or major double top that's going to come into play. And what happens when you get that kind of price action and then you get a lower high? So essentially you're getting this kind of action. It's broken, so that was the move down here. And we've worked our way back up, consolidate it, and we're retesting that high. I'm going to stuff this up, aren't I? We're retesting that high. The problem that's going to be if we start getting a lower high here, you'd expect it to come right back down to potentially $6 and retest and then have to reset. Because what happens, if a market can't push through a level, it can't get through. Maybe this kind of stuff, even if it pushes through, it has to pull back to get some more liquidity back into the market, get some fuel to drive into higher prices. So it's going to continue to go up, pull back, up, pull back, up, pull back. Now, if you get it failing at a level, what that says to me is that, okay, if it can't push through, it's going to get some selling pressure. And if you start to hold a lower high, it just means that buyers are going to take some money off the table. Maybe they're in right here, they've sat through all this kind of action, and then it starts to fail. So if it fails, it's got to start searching for liquidity again. And where could you find liquidity? It could be back into this zone, it could be back here, and we have to have a deep correction, reset, and you want to see action of some price action where it has to reset and it's starting to lift again. That's great. But if not, this serious kind of a price action where you've got your double top, your retest fail, whatever you want to call it, and then you've got a lower high start to come into play. Anyone that's been holding for a while, or at least bought it sort of the higher end of the scale, around 8, whether they bought it through here or late into this session that held it, and especially if you bought it late here, you don't want to sit through potentially a deeper correction again. It could have been months, and now you're looking at down the barrel of another 6 months before it starts to build up again and proves you're right. Now you can put your money somewhere else and make better use of it. So that's where I think you get this kind of action where people go, that's it. It can't get through this second time. You've got a double top. They're looking at all the price action. Maybe there's a not so great a fundamental story to it, and the market starts to head south, and then sellers start pressing it down. Anyone that's looking to buy might just stand aside. You've got the failure off a double top. They go, that's it. I'm standing aside. I'm going to wait till it resets and then buy into it. They don't know where it's going to reset. Maybe it pulls back to 8, resets at $8. Maybe it doesn't. Maybe it resets at 7.25. Maybe it doesn't. Maybe it takes all the way down to push through $6 before it bounces back and then resets at $6. You don't know. So if you're new and you're watching it, you just be sitting on the sidelines. Let it play out. Let the action play out. Let it reset, and then potentially go in if you like the story. Okay, so that's, I guess, long story short. If you're long this one, this is a good example of just where are going to be your levels where you could be put under pressure, where you're going to have to take some action, whether that's get out, tighten your stop, or take a partial, whatever. And that's what we're continually looking for when you're in a profitable trade. Let's just look at, is that a good example? UWL, I think that's going to just about cave in soon. Now that was one, I'll take a snapshot, where we've got similar kind of action, haven't we? We're up at the highs. Probably look at that high. There could be an extension up to $1.90. So it basically touched on that $1.90 as well. It's starting to fail. I mean, that price action looks good. There's nothing to say that it can't pull back, consolidate, or at least consolidate around 175, 180 and go again. But I don't like to see we're going from overbought to oversold into a level. You get oversold, it just seems to be running out of steam to me. So if it runs out of steam, it's got to start searching for liquidity again and start to reset itself. And I'd rather probably tighten up my risk, which we just moved to, I think it was $1.70. So we just moved our, can't draw a straight line. Yep, $1.70. So that's our new risk level. We're in it somewhere around here. I think I know it was in here, $1.52. We've already booked a profit at 76, just in here somewhere, into the highs. So I'm happy to book it into the highs. When you start look like you're getting stretched, I don't muck around with that. I'd rather just take some off, book your 20%, or was it 15%, 16% we took on that one, and then just use the second half, or you can do it in thirds, whatever you want to do. We do halves. Use the second half to see where it's going to go. Give it a bit more room. But when I see this action, a wick here, another potential wick that's playing out, I think we're going to get some sort of pullback, and it could all pull all the way back to $1.60 before it starts to reset and that starts to accelerate again. Then we'll just take another trade. We'll be back into it again. But the thing that got me as well today was really they had a bunch of shares, about nearly $2 million worth of shares, probably more, 2 to 3, I was thinking $2.5 million worth of shares coming out of escrow, which to me it could mean that it's going to get knocked on the head. It may not mean anything. What it does mean is someone's got a profitable position they're sitting on. If they start to see it roll over, they're probably going to book some profit because it's free money in essence. If it's in escrow, it's probably a lot cheaper than $1.90 where they got it at. So I don't know where they got the shares at or where the shares first went in escrow, but either way, I expect that sort of thing when you've got extra liquidity, supply demand, you'd expect something to sort of, pressure to start to come in, especially when you're at this 190 level, as these highs up here. So yeah, that was UWL, but it's a very similar price action. I would rather tighten it up if I see any sort of inkling that things could roll over. I'd rather protect my gains, especially in a market that's, you're pushing the all-time highs. The US is looking like it could roll over. Anything's possible. I'd rather protect my gains at this stage rather than just leave it open, leave a nice wide stop and just believe that it's going to go to the moon. I'd rather manage it correctly, I guess. So that's UWL. I'm going to see what happens on that one. Anything you're going to take a quick look at? Otherwise, I'll just keep banging on. I think there was something else I wanted to look at. MGX kicked off today. That looks great. Sitting on top of those MAs. Good, in a perfect zone for a rally. Weekly, not so much, but the daily looks great. It could extend through 90 cents. That's what I'm expecting for anyway. S30, I could never get S32. Forget about that. So MOE, I just wanted to bring to your attention. MOE, it may not be everyone's cup of tea. It's not too big, but again, that price action where we see stochastics coming down, but prices getting soaked up at higher levels, this looks like it could easily go. It could easily continue this trend up. It could be starting to attack $5. May not be a lot in a trade, but if we go back to the weekly, if it attacks through 5, it's sort of a key, not a key level. It could even extend up to 520, which is around this high. If it continues up, that is. And then you'd be looking up towards maybe $6. Where's your next sort of level where it could create a few issues. The weekly's not a cracker. Actually, that's what I wanted to say. The weekly's not, just what we were saying here about your stochastics. It works similar on the weekly. So you're looking at it going, well, last time it was up, it was getting overbought territory. It failed. It was up near, 525. This time, it's starting to get in overbought territory, and it's at lower levels, say for 450 to 475. So you got to sort of look at it and question, well, how much more upside could there be before I expect some sort of corrective action on this weekly chart, where it could be doing that now. It could be halfway through correction, which would mean that maybe it's just not going to take off here. It could just pull back, retest, 430, chop around for a few more days or in a couple of weeks before the MA is starting to catch up. It sits on top of the MAs and then looks to go. That would be a much stronger signal if we can get something like that. But if it looks to kick on from here and just trade through the highs at 480, for instance, the weekly hasn't really changed that much, and it could just run out of puff real quick. So that's why it's always good to look at both charts, the weekly and the daily. Ideally, I mean, this daily looks great. Ideally, if you got the weekly is pressing up at somewhere around 50%, up off oversold territory, it's pressing up, and it's sort of your first move, or your first leg up, or even your second leg up. Ideally, if that's the case, then you could say that the probability is that it's got a lot more room to move on the upside, and I'm willing to take that daily setup. But at the moment, these things sort of get to me, especially in the current market climate, when you get stretched on the weekly, but the daily's setting up nicely. I just look at that going, oh, my risk to reward, it could be a one-to-one trade. That's okay. You could still take it. There's nothing to say that I'm wrong. And the weekly's not just going to stay overbought and the market keep pressing higher. That's fine. But I'm going to want to manage my risk quite tight. I don't want to muck around with it too much. I thought I'd bring that to your attention anyway on MOE. So BHP, let's do those and see how we go. BHP, probably easy to see on a weekly. So look, it's looking okay. I just want to check something. I've got to take a snapshot. So on the weekly, can you say, yep, this could easily head higher? Yep, you can. So really, that's pretty prime. So what I was just looking at, you can see this little level in here on the daily, it's broken it, so it lifted, bang, straight through. So that's the anchor, basically, to this leg up. Last time we had that sort of corrective action, we had a leg up here. So this is kind of your weekly move. Sorry. So that's what's happening on the weekly. You know, up, down, pullback, up, pullback. So this, we're just in pullback mode. We haven't come out just yet, I wouldn't say, on the weekly. But yeah, it's had a good correction. It's corrected the most recent leg up. Yep, it's in a prime position on the weekly. It hasn't broken this uptrend yet. Okay, let's just go down to the daily to see what's going on. And if you go down to the daily, I never like trading these big ones, to be honest. I don't think they're as clean cut as everything else, but that could just grind higher. If this is your correction, you've got essentially, you know, your double bottom, you've retested this bottom, it's held. So the retest is failed, or on the short side, that is. It's held, and we're starting to lift again. So if you're long this, fine. Getting long on the daily, knowing that the weekly's on the rise, potentially on the rise. Is it getting overcooked up here? Is it not getting overcooked? The weekly suggests it's got a lot more room to move on the upside. Let's get rid of that. A lot more room to move on the upside. So what's could happen? First protocol could be a problem at 39, maybe not. Or maybe it doesn't even bother with that level. And that was a gap up. You know, it's gapped up and just failed on that day. You can see that candle there. Open strong, smashed into the close, and that pretty much triggered a sell-off. Come back and retest the low. So maybe that could be your first level, but I don't think that's the key level. The most recent one will be up towards the highs at 41. So really just marking it up. That's your offer zone where you expect some sort of liquidity in the way of sellers to come in, and then just see what happens. Write it up and just tighten your risk up. So every time it pops, you know, has a good little minor pullback like this or this or this, tighten your risk up and let it go. But either way, I think the weekly looks great. The weekly's on the rise. It got supported at this higher level at around 34.50, say. It's on the rise here on the daily. Weekly's got a lot of room to move on the upside. There's nothing to say this can't just keep going. What's the other one? APX. So APX, let's go into the weekly. That's pretty much, so what you're trying to question looking at the weekly is the same sort of thing as you just said with BHP. Is that enough of a correction off the highs at 32 bucks down to 20? So it's probably about a 30% retracement, isn't it, of this leg up? Is that enough? Fine. Or because what we're seeing is this bias change slightly. You can see, probably see it clear on the daily. Push, pop, push down. You know, that's all one move down, and it started to, you know, this little leg up here has broken that downtrend. All the pullback. So it's just that, you know, our old traditional price action, if we can clear that up. Price action we're like, we've got, this is your leg up, this is corrective action, 2 legs down. We've come down into 20. We've just broken through, was it 23? I think it is 23 bucks with this little pop up here. So it's 1, 2. So what I'd ideally be looking for, you've got 2 legs lower. Maybe that's your move. We're up here. I'd obviously wanting to be seeing high low start to play out, a bit of contraction, like a clear entry setup at a key higher level. And by key, I mean, you know, it's a weekly higher low. So if you step back to the weekly, you can see that action 1, 2. pop up. I want to see that basically just going up, pull back, go. And if it can hold that higher level and you get on your daily, you get something like this, then yeah, you know exactly where your risk is going to be. You're buying the break, risk below, knowing that that's, you know, you've got a minor risk on that daily entry with a key high low from your weekly. Things are looking up. You got both your weekly and your daily pointing up, and you're just trying to follow that momentum to see where it goes to. And then from there, once you're in and you've got price action on your side, and it's pointing high, then you're just trying to pick out what levels could cause a problem. $30, all-time highs. You know, you sort of got this zone in here. If we draw that up differently, you've got a zone maybe in here that's going to cause a bit of a problem. Okay, so that's what I'd be looking for. If that's the case, you know, is it a 1-to-1 trade? Is it 2-to-1? And then just see what happens. If it could cause no problems at all. It could just blast straight through there, go to 34, 35, and away you go. Then you're into clear skies, and you're just trying to manage your risk as you go. And you're trying to manage, this is the first leg up, this is your corrective action. You're trying to manage a leg up potentially like this, and just follow with your stops behind. You know, higher lows, higher lows, higher lows, higher lows, higher, until you get something that stops you out. Does that make sense there, Jane? Any questions on those guys before I we'll finish up there? Just let me know. If you've got a question later on and you're listening to this later on, just send us through an email to TradeSetup. Was it support@tradesetup.com.au? Otherwise, we'll and I'll get back to you, or I'll talk about it next stream for something key. But hopefully, there's a bit of information there that you can chew on a bit. But I think it's a good idea. I don't know if anyone does it. I know a lot of fundamentalists don't even bother with charts, but if you're trying to get, if you're new into charts or you're trying to get better, it's a good idea just to take some snapshots of your, probably see mine. Show you, we've got quite a few. So I'll do tons. So this is just, you know, old charts that we take snapshots of every sort of everything that I'm looking for. And whether it was an entry or something we're looking at, it doesn't matter. It's good to have those and refer to. Because sometimes if you're having a bad run, it's always good to go refer to charts when you were doing well and just check out, have I changed my trading style too much? Have I veered off course a bit? Is that why I'm losing? Or is it just, for lack of a better word, a crappy market where I just can't get a good entry that kicks on for me? And I'm doing the same style, I'm doing the same kind of entries. If I'm doing the same entries and it's still not working out, you might have to rejig things a bit. But it's always good just to refer to back to some old charts. Anyway, I'll knock on the head there, guys. If there's no questions, have a good week. All the best, and we'll be back in next week at 12:30 again, and we'll just go from there. All right, guys, enjoy. Thanks for joining me, and I'll speak to you again later. Cheers, bye.